This is how Frontier Opening Bell gets today's trading day started here on the show. Thank you very much, everyone. And thank you very especially Joshua Adebisi, Head of Banking Research and Analysis at Ethiopia Capital Management based in Lagos. Good morning, Josh.
Good morning, boss.
Good to have you again on the program. Yesterday was the first trading day, a bit mixed for a number of Frontier African exchanges, the BRVM and the Nigerian market in the red, the Egyptian market, the Nairobi bourse, as well as the South African market made some gains, as it were, a bit of a divergent trading day across the various frontier markets and jurisdictions to start Monday, the full second trading week in the month of September. Quite a bit on the to look at as we step into the trading week. If you consider Kenya's treasury looking to 20% tax rate on betting, it's been an issue in a number of jurisdictions, including the UK, whether betting agencies should be companies should be taxed. There's been a whole lot of discussion even in Nigeria around what the tax authorities want to do with the betting industry. Exports by Kenya was about 643.7 billion shillings in 2020. Kenya Airways, according to a CNN report, was the number one airline in terms of cargo movement throughout last year, despite the pandemic. Kenya Airways actually refit some of its commercial planes into cargo and had a whole lot of cargo business. So exports for horticulture, agricultural products, and all of that, Kenya came very nicely out of the pandemic year on that front. Tanzania has ratified the EFCFTA, became the 38th countries on the continent to ratify the new intra-Africa trade deal, despite 55 countries signing up. The total ratifications now are 38. Vodacom and Safaricom and others within the consortium have agreed to fund Ethiopia Opco, which is part of the deal they got with the Ethiopian authorities for the telecommunication license sale, which was done a couple of months ago. That came very heavy, hundreds of millions of dollars. And the Bank of Uganda says the central bank says the money in circulation within the country grew to 256.6 billion shillings in the months of June and July. A whole lot of spending there, by the way, as folks begin to get out of the pandemic and move on to business and commerce. Let's look at this story together just a few minutes. Joshua, when you talk about export, how countries like Kenya, which has a non-oil, by the way, is ramping up seriously on exports even during the pandemic year of 2020.
Yes, so you see, I think when you highlight the fact that Kenya is a non-oil economy, the truth is in many cases, obviously, the non-oil economies are very much set up in a way that they are more likely to benefit simply just due to the fact that obviously we saw the price of crude drop significantly during the pandemic for various reasons. But Kenya, with their agricultural produce, they're always going to, there's always going to be demand for food. There's always going to be demand for those exports, and so thankfully they were able to capitalize. Even with a few issues here and there, with regards to funding or with regards to financing, but at least they were able to get to this level. 643 billion Kenyan shillings is quite impressive. But I think that we just need to realize as a continent that we need to move away from, just natural resource mining and exploitation. You need to add value. You need to diversify your economy so that even if things go wrong in one sector, you're not completely hamstrung, and you can always rely on other sectors to, pick up the slack, which is not the case in many countries across Africa. And so I think Kenya definitely with regards to exports are doing quite well, and I'm sure that they will even continue to get better, and we would like to, cross that 1 trillion Kenyan shillings mark at some point.
Just give me about a minute of your thoughts around the AfCFTA in terms of the total number of countries that signed on. Almost everybody have signed on, but in terms of ratification, it's still about 38. That's Um, what's your take?
Well, so like you said, it's still, it's a bit of a slow process. Of the 54 countries, for one reason or another, if a lot of them have still not, excuse me, a lot of them have still not signed up. I think you're looking at 16 more countries to go. I think, in a lot of cases, there are a few concerns, just one or two concerns with regards to, the issue of dumping, the issue of access to the to Africa through the northern African countries. So, that's access for European countries. That was also an issue for Nigeria, with the idea or the prospect of, Spain or the likes coming into or bringing in or taking our products from Nigeria with through Morocco and other northern African countries, which you would sort of, I guess, to a certain extent, feel like a bit of a cheat. If they're able to come into or access the Nigerian markets or the African markets through those countries, I feel the African countries may feel that that is a bit of an issue or that is a bit of a threat to their competitive advantage. But I think that these issues will, with time, be slowly ironed out. So 38 is still a good number. It's still a great number, in fact. I think, most of the major economies across the continent have signed on. Now, obviously, as time goes on, what would actually encourage everyone else to sign on and to ratify is if they start to see massive amounts of trade being done across the continent. If trade volumes go up two, three, four times, and they see that wealth is being created, value is being created, obviously they're not going to want to stay on the outside of that party. They're going to want to come in as quickly as possible. So that is really the best advert for the AfCFTA, is for there to be more trade, for there to be an increase in trade, and for that trade to create value and to create wealth.
Makes a whole lot of sense. If you show me some numbers, well, I'm going to join the party. Very simple. But let's talk about the West African space. A bit of very busy week for Nigeria with the Monetary Policy Committee meeting on Thursday and Friday. Quite a bit of data expected. Inflation is expected to be out tomorrow, the 15th. So second quarter local and foreign debt data, we're expecting that today from the MBS. The Bank of America research unit says they could move their target for oil prices to $100 a barrel by the middle of next year. That sounds a little bit like some of the forecasts we've heard from the LNPC's officials in Nigeria. Fidelity Bank profit are in at 70.8% for the first half, but there's no interim dividend on the table. And Ghana raised about 1.24 billion shillings from a 6-year bond issue. That offer was overbought by 24%. We have a couple of things to talk about. What's your take on some of the economic issue and the MPC that we have for this week, Josh?
Well, first of all, most interestingly, the MPC, I think, was moved forward. I think so. You could even almost describe this as a bit of an emergency meeting, obviously due to the fact that the situation surrounding the foreign currency has deteriorated quite rapidly and has currently, I think, gotten to somewhere like 550 naira to the dollar. And obviously the CBN is very concerned about this. Now, that is not to say that, they are categorically going to reverse their earlier decision to ban BDCs and, start selling back to them. Although the liquidity of our foreign reserves has gone up in recent weeks, so it is a very large possibility that they will feel they are in a more stable position to resume selling to BDCs in order to stabilize the currency. But obviously, the problem is this back and forth with policy with regards to foreign currency is still creating an environment, is still creating a perception within the wider market that Nigeria is not in the most stable state at the moment. With regards to inflation, I think there won't be that much of a pass through from the exchange rate into inflation for various reasons. So I think we're still going to see, and again, the high base effect from last year is still going to limit the level of inflation that's reported this year. Unfortunately, the NBS has still not given us the my my most important my most important statistics for the year, which is the banking statistics. But
Yeah,
well, I
hopefully.
mean, debt and trade, we already know what to expect there. Those debt has gone up, trade is improving, but we're still running a deficit that will not change until something fundamental changes within the economy. As for Fidelity Bank, yeah, they did a very, very impressive result for the half year. 19.3 billion. Last year it was about 11 billion that they did by the half year. But actually, interestingly, their gross earnings were actually down year on year. And, their earnings is not what improved. What actually improved was mostly around their impairments. So they reported way lower impairments. They reported just over 2 billion in impairments for the year. So obviously, because of the resumption of economic activities and things sort of going back to normal, I guess they're not accounting for, they're not expecting
Mm.
to, write off as many loans or to impair as many loans. And so that really,
Get it,
really
yeah.
is what boosted their half year profits.
Mm.
Overall, yeah, like you mentioned, they did not, despite the fact that the CBN kept us waiting for the results, they're the last bank to release, but they still did not, publish any kind of interim dividend, which is fine. I mean, if they continue this trend or this rate of profitability for to the end of the year, then the investors can still expect a pretty solid dividend payouts for the full year. I think they're still a bit too small to be giving out interim dividends just because it's we usually associate that with the higher level banks at the moment. So that's not too unexpected.
Interesting. So, are you a little bit concerned, or are you in line with the Bank of America talking about the forward oil price target to $100 a barrel from middle of next year? Do you think anything will change strongly to the upside? We're now about 70, 72. Well, touch a bit 73, come back a little bit to 70. Looks like we're not breaking out significantly from that price range.
Well, okay, so there are two ways to look at it. On the one hand, if that were to happen, obviously it would be great for Nigeria. It would, go a long way towards addressing a lot of the issues that we're currently seeing and redress the trade balance. At the same time, the main issue is the fact that our production levels are still not that high. I'm not sure the exact specific figures right now, but I think we're still in the low one point maybe 1.4 millions per barrel, including condensates. So we're still quite a far ways away from the last time that oil reached $100 per barrel when we were producing well over 2 million barrels per day. So that is a big issue, because if oil is to reach that target or to reach that price, it will probably have a lot to do with supply and demand dynamics, and we may still not be producing at full capacity, or we may still not be exporting at full capacity. So that is what is going to hold us back from gaining or benefiting 100% from that kind of price. Although personally, I still am very skeptical that crude will ever reach that price or stay at that price for a sustained period of time, like we saw, you know, during the last oil price boom, just due to the fact that the world is moving very quickly away from crude
Fossil
into
fuel,
the
yeah.
renewable space, and it is a very aggressive move at the moment because we are seeing firsthand the effects of climate change, and so a lot of energy companies are no longer, a lot of formerly crude companies are now becoming energy companies and trying to move quickly out of their reliance on the crude oil space, which I think Nigeria should also be doing. But of course, we need, unfortunately, ironically, we need the money from crude in order to be able to move away from crude. So it's a bit of a double-edged sword. It's a bit of a double-edged sword.
I agree. I agree. It's a bit of a double-edged sword. But again, let's leave it there because 100 looks a whole lot of, well, who knows tomorrow? So, but let's just hope everything stay well, because again, high oil prices could come back and hurt you seriously in a number of ways. The price of gasoline, petrol, diesel, and what have you, you need to account for that if we have if we all have what it takes to balance the books in the manner of speaking. What is in the barrel and what is in the liter of gasoline for your car or vehicle or whatever. So let's talk about Southern Africa very quickly. Metro prices rally is resuming yesterday Aluminum remained highly elevated, slightly above $2,900 a ton per metric ton. Again, on the back of China talking about releasing some of its reserves into the market, as well as concerns about U.S. inflation, outlook on FOMC, the tapering in the U.S. and by the ECB, as well as the political issues in Guinea here in West Africa. Vodacom is going solar to reduce carbon emissions, as Joshua was saying earlier, about everybody trying to be part of the new world in which the environment is king. Sanlam, which is Africa's largest insurance company based in South Africa, has sold its UK unit of life and pensions unit to Chesnara Plc. The company announced last week that this sale will help it put that money back in South Africa's home market as well as India. An Angola President has signed off on a $150 million loan with the International Bank for Reconstruction and Development for COVID-19 pandemic response. Everybody is looking for a way to get a hand around the whole pandemic. But let's quickly talk about a minute with you, Joshua, a few seconds, your thoughts around the sometimes how financial services, banks, insurance, and others expand overseas. Then after some time, decided to close shop and come back home. What really sometimes could be the underlying factors here?
Okay, so what usually happens is, it's just about strategy, about corporate strategy, whatever the financial services companies' goals are at the time that they make those decisions. And usually what you'll find is that, there will be a period of rapid expansion, and it's only natural for them to want to go into the more developed markets. The UK is, still a very big financial market. So a lot of African companies, a lot of Nigerian banks have branches in the UK. So a lot of African companies would still want to go and, expand in the financial services sector there. But what they would usually find is when things get a bit more difficult and the operating environment changes for whatever reason, they then start to find a way, to change strategy and to return back to their core business or their core markets. And so, usually what happens is that those foreign markets become a little bit more of, like expendable. And so once that happens, you see them trying to sell off their assets and return to their home market because they understand their home markets better and they're able to operate in a very different way in their home markets than they would have to in the UK. Because the truth is, their life and pensions units in the UK may not, be able to break into any kind of top tier in that market. But obviously, they are still a very, very big name on the continent. And so that
Yeah.
allows them to leverage a lot more on their scale than they would be able to in the UK for various reasons. And the regulatory environment in the UK is also highly dynamic, highly susceptible to change, and also a little bit closed off. So if you barriers towards that top echelon of financial services, just because there are a lot of establishment companies, a lot of establishment groups there that these companies might not be able to break into. And so they would usually just be serving their people in those markets rather than being able to expand to the British public.
Very, very interesting point you raised there, Josh. Again, because if you can't break into, you can't go beyond your primary market, then you're not. Because in South Africa, about 20 million people, population still has a whole lot of headroom in terms of life and pensions. So if you stay in the UK, which is a well-developed market and what have you, and you want to take the likes of Old Mutual and a whole lot of other names there, you want to take them on, you've got a whole lot, you've got a whole lot. So these good guys have locked down a whole lot of market segments. So if you sell it off, take the money, take it back home, because India is a growth market, by the way, it's an emerging market. So insurance, life, and pensions there in India and in South Africa, which are similar in a number of ways as emerging countries. Then you look at a whole lot of other issues in terms of currency, exchange rate, a whole lot of other things. So I think, but it's a good decision, by the way, sometimes to just back out, take the money and put it elsewhere where it could just yield very nicely. how do we nicely put it up together today for the North African market? And that's where we're wrapping it up with Egyptian companies signing about $2 billion contracts for electricity stations in Libya. The whole North Africa seemed to be having a whole lot of relationships in terms of moving, whether it's with Saudi Arabia and Egypt and other neighbors, even for a country like Libya, which is so politically fractured since the ouster of the late Muammar Gaddafi in 2011. Egypt e-banking transactions to about 2.8 trillion in the full year 2020-2021. That's according to the authorities. Mashreq Bank of Egypt has named Raja Sana as the senior vice president. Congratulations. Lafarge Wholesale in Morocco reporting net income at 1.039 billion dirhams for the year. And Tune Index closed August up 0.67% month on month. That's the backward-looking information. Egypt for you and e-Transact. Let's talk about e-Transact banking in Egypt. There's a whole lot about fintech and all of that. But in terms of the brick and mortar of electricity, Joshua, how do you weigh in very quickly with us on the show on that?
Okay, well, so what I'll say is it's a little bit surprising just due to the fact that it's in Libya. Obviously, due to the fact that, like you said, they're still very, very politically volatile at the moment, and I wouldn't say that they've completely settled all their issues in that country. So this is, I think, a very big, show of faith. The fact that these stations are going to be in Libya. There's obviously still demand for electricity across the entire, African market. They didn't. It's not specific exactly what kinds of power stations, but in Libya, it will probably not go beyond natural gas generating plants or maybe solar or wind. Who knows? But the point is that I guess this may be a sign that things are stabilizing a little bit because I don't think any company, any bank would put money down in a situation like the situation that Libya has had for the past few years without some sort of guarantee that there will be some, stability, there will be no, there will be no violence attached to or that disrupts their business because they will probably not just be supplying electricity to only Libya but across the northern African markets, just a way to expand, even back to Egypt as well. As for e-banking, this is actually quite interesting because what I want to say is that I think currently the Nigerian market probably has the most exciting, fintech ecosystem, fintech space on the continent at the moment. But it's quite interesting to me that e-banking has gotten to the point of 2.8 trillion Egyptian pounds. That is serious amounts of money. What I would say is probably a chance that the same way we saw a huge uptick in e-banking transactions in Nigeria due to the pandemic was probably what also drove e-banking across Egypt. And like we've said, Egypt is a very strategically important market in Africa just because of its connections to the Middle East and to Europe as well. So that is a very big market, and I think we're going to only see that number continue to increase. And if you look at the level of transactions that we've seen across the rest of Africa, it is very, very likely that just the way Nigerian companies are expanding, we'll also see the same thing for Egyptian companies.
Interesting development across Africa, if you ask me. Quite a whole lot to talk about. Thank you so much, Joshua Debisi, Head of Banking Research and Analysis at Vetiva Capital. Thank you very much. Let's leave it there for this Tuesday, the second trading day of the week, the 14th of September. Thank you very much for your time. We thank everyone for watching. See you next time. Bye for now.